Hi again, welcome back to my channel. So what do we want to talk about today? Well, for this episode, I thought it'd be a good idea to get into some of the details around customer onboarding and suitability tests. See, when you start thinking about investing and you want to have a discussion with a professional investment advisor or an asset management company, normally what happens is that these professionals, these companies, typically want to understand a little bit more about your background. They need to have sort of a reasonable basis to believe that a particular investment portfolio or strategy would be suitable for you or meet your needs. And for them to be able to advise you, they need to understand more about where you're coming from, in the sense of they need to understand sort of like what your income level is, where you are along your investment journey, your age, how soon you might need access to the funds that you are investing, and other details, which is why it's so common to get a response from a professional investment advisor when you ask them sort of on the street, like, which stock should I buy, for them to say well, it depends, and for them to be very hesitant to want to offer advice, right? So they'll typically want to have a little bit more of a discussion with you, a sort of an interview, where they might ask you to fill out a form or a survey so that they can understand where you're coming from, what your background is, where you are along your kind of investment journey, what your time horizon is, and then they can tailor a strategy that would meet your needs. Because there's a universe of investment possibilities out there, it's really hard to say this is the perfect investment for everyone. There's really no one size fits all. Yes, there are companies that are clearly outperforming the rest of the market, but over the long term, if you're constructing a portfolio that you want to be confident in for the next number of years, you need to take into consideration all kinds of different macro events and economic cycles that could impact the performance of the collective companies in that portfolio. So there is typically an onboarding process, almost like if you're applying for a job, whereby you fill out sort of a form, you give some information about yourself, what your goals are, what you're looking for, and the investment company is looking to match you with a product, a portfolio or a strategy or a fund which kind of is suitable for you. So let's kind of go into what that could look like, but we'll also at the same time think about this from sort of a digital first, AI first perspective, right? How do we build and design these kinds of products and experiences in today's day and age for the next generation of investors who will be building their wealth over the next several decades? So for the most part, the companies that have accumulated a lot of assets under management and have built strong kind of investment relationships with their clients have done that over the years. But now we're kind of entering in a new day and age with a new generation who are just starting that journey. And the way to reach these customers, these potential clients, and their expectations in terms of the level of service, the level of information, and how hands-on they'll be in deciding their kind of investment path going forward is a little bit different. In many ways, it can be substantially different. And so it's quite important for companies who are in the industry today to start thinking about how they attract, onboard, and retain those new generation clients, whether that's through the form of you're looking to start building your wealth. You just started working and now you want to start investing for your future. You might have a goal that you're saving up for. Maybe you're buying a house. Maybe you want to take a trip. Maybe you got married, you have some kids, and now you want to start saving money for their education, right? Maybe you plan to put them in a private school or a college fund and so forth. So you have these kind of, in the horizon, over the short, medium, and long term, you have these different goals, these events whereby you will need to finance it somehow. And so by investing, what you're doing is you're looking to grow your wealth. You're looking to put your money to work. Any excess cash that you have, the temptation is normally to spend it, to buy things. But I think what's important to the whole concept of building wealth and to get the mindset and to turn that mindset around in terms of how do I actually make my money work for me, rather than me just spending my money to buy things. I think that takes a different approach, and I want to say that I kind of hope, and I think this is going to be true, that the younger generation will start to shift towards thinking more long term. So it's not going to always be about spending your money and buying things, but more like investing in assets. And part of the whole inspiration around Portfolio was to make it so that you could have a portfolio, or you could express your ideas in the form of investing, simulated investing, because remember, we're not dealing with real money with Portfolio. It's purely an educational and simulation tool, right? We want people to get, to understand, to go through the training and kind of learning cycles that it takes to become a good investor, right? Learn the ropes. So this is kind of like, let's use a boxing analogy. This is kind of like you're training against the heavy bag. Maybe you're doing some sparring, but it's not a real fight, right? This isn't really going on your official fighting record. You are kind of practicing, and that's important to becoming good at something, right? You don't just wake up one day and you're good at something. You got to practice. You got to put in the time, and you have to learn. So that's why I think a tool like Portfolio is filling a much needed role in the market for a variety of reasons. We talked about the practice element and simulating, building diversified portfolio according to modern portfolio theory, setting goals, as well as the whole idea of onboarding customers. How do I get started? It seems, this whole idea of investing and what should I buy, what are the different funds, it can be overwhelming for people. And there's some people who want to go right into the whole trading aspect, and there's other people who are like, that looks way too complex for me. I need something way simpler, something I can understand. And you have another group of people who are like, I'd rather invest in things that I can actually see, I can actually hold. So they invest in like collectibles, or they look at things like maybe luxury good items, for example, as investments, right? They're like, okay, I can actually see what I own, and I can sell these on the marketplace, and I can monetize that if I ever need that. Jewelry is another great example, right? You can actually buy the jewelry, you can actually wear it, and then you can sell it if you ever needed to for, if hopefully the market rate is such that you make a profit. But the whole idea around Portfolio is to create more of an asset type feeling of holding investments, holding stocks, having a portfolio, right? You can actually see what you own, and that's why we use the aesthetic of the card, because we wanted to give people the idea of, we're spending money all the time, and for the most part, the things that we spend money on disappear, like they're no longer there, right? We have, and I'm not judging anyone, because we live our lives and we want to make the most of our life, but there are things that we spend money on, whether it's food, experiences, and other things, which are ephemeral. They last in the moment and then they're gone. And my whole pitch is that we should have at least some portion of the things that we spend our time and attention on into things that are going to help us build wealth over time and things that could be lasting. And I believe owning a slice or a share or a portion of a company, of an institution, of a brand could be potentially a great investment. But we need to visualize that in a way whereby we feel like we own something and we can go and look at it. So kind of like buying, or investing in rare baseball cards, for example, collectible cards. I wanted to bring in the card aesthetic into Boltfolio, which is why we have it the way we do. All right, now, Boltfolio is a great platform for you to get ideas, research companies, and discover companies you may have never really thought about before. Maybe you have an idea and you're thinking to yourself, I want to invest in cosmetics or semiconductors, or I think there's some restaurants that I want to know, are they publicly traded? I go to them often. I see people shopping at them all the time. There's always lines out the door, right? Like, they seem like they're doing something right. Maybe I can be part of that growth. So Boltfolio is providing this kind of search, AI-powered search, which allows you to sort of scour the investment landscape and help surface interesting ideas. Now, you can't act on those ideas in the form of actually making transactions on our website. That's not what we're offering. But I think I compare it more to maybe a Google Maps, where you're looking for places, you're looking for things to do, to go and see, and it can actually give you directions, but it doesn't actually take you there. It doesn't drive the car for you. You still need to go and do that on your own, right? It can make suggestions. It can help, surface highly rated activities or places and things to do and see, points of interest. But at the end of the day, you're still responsible for going out there and visiting those locations. So Boltfolio is a little bit like helping you navigate this huge world of investment opportunities in the form of stocks, in the form of the stock market, companies and equities. But it's not, right now, it's not designed to actually help you make those investments directly. We are more of like an educational tool, right? So you're just learning. But I still think that has value. And I believe that for many investment companies, the products that they offer are not really tailored for today's digital age. They're definitely, for the most part, not generative AI ready. And they're most of the time not really speaking to a sort of a younger, digital savvy demographic. So I think there's a big gap there. Also, I think for the most part, asset management companies and investing apps struggle with acquiring users, customers. It's a big step, right? We talked about how difficult it is for people who are new to the market to actually take that step and go and sign up and start learning about how to become an investor. So how can we simplify that? How can we streamline that? And how can we bring this, this world of opportunity to a new market? And I want to show you how we can do that today with AI. So we talked about the suitability investment form. Let's say, for example, that, filling out a form takes quite a bit of time and effort. But instead of filling out a form, what if we could just talk to a chatbot, just describe where we are, have a short sort of interview, right? So what I've done is I've just loaded in a quick clip of me giving a kind of a hypothetical description about who I am, where I work or what I do as work, how old I am, how much money I have, what my knowledge of investing is, what my goals are, what my risk tolerance is like, and kind of like what my time horizon is. And so instead of filling out a form where you'd have to fill all of this information out, you're reading a lot, you're clicking here and there, you're typing in stuff, right? You just have a conversation using natural language. And using AI, I was able to kind of transcribe everything that I discussed and map those answers to the form elements on this page. And it got about 80 or 90% of the form completed, and there are a few areas which have not been filled out. And I think that has something to do with possibly that I didn't either explicitly state that in my statement, or it's more subjective. So let's just go through that really quick. I just said, right, imagine that you send a voice note through your chat application, right? Or you just record a short clip, a background about yourself, and you say, like, hi, my name is Bob. I'm 45 years old and work as a software engineer. My annual income is around $120,000, and I have a net worth of approximately $500,000. I've been investing for about 10 years now, mostly in stocks and mutual funds. My primary goal is capital appreciation, and I have a moderate risk tolerance. I wouldn't be too worried if my portfolio lost some value in the short term, as I have a long-term horizon of more than 10 years. I can invest about 15% of my income each year, and I don't anticipate needing access to these funds in the near future. So, admittedly, I structured this kind of voice note in such a way that I was answering already the questions that were being asked in the form, in a typical suitability form. But I wanted to use this as a demonstration, right? So through that text, I was able to fill out the name, age, occupation, income, net worth, investment experience, right? So right away, I'm already filling out tons of information on the form. The next thing I'm doing is I'm actually identifying through what was described what my objectives were. In this case, it looks like it was capital appreciation, right? I have a long-term time horizon, meaning I don't need access to these funds directly to support my lifestyle or to pay for my expenses for more than 10 years. So I'm looking to make long-term investments. My risk tolerance is moderate, so it's not very low, not low. It's not high, or it's not very high. Let's just say it's in the middle. Now, one of the things that was not filled out was how would you react if your investment portfolio lost 10% of its value in a month? Sell all investments, sell some investments, do nothing, buy more investments. This is a key question, and you'll typically see a similar question asked on these investment suitability tests or surveys. And this is helping them to kind of gauge what your risk tolerance would be like. So if you were to say that I would sell all my investments or sell some of my investments if your portfolio lost 10% of its value in a month, that is a signal to the sort of investment advisor or to kind of like the rules or the algorithm behind how they process your data or your responses to not recommend you stocks that are more volatile. So they would probably put you into a basket of stocks that don't have as much volatility, in the sense that maybe your stocks don't appreciate as much in value, but they may not sell off as much either, right? So they're a little bit more stable, steady growth, right? If you state that you would do nothing, or you'd even buy more investments, then that would kind of give them an indication that you maybe are a little bit more risk, you're less risk adverse, right? You're willing to tolerate more risk because you see those as buying opportunities. You're not going to get freaked out if your investment portfolio drops by 10% in a month. Now, 10% here in this case is not that extreme, I would say, of a test, right? Typically, you'll see investment or these kind of risk tolerance surveys ask you about 20 to 25%, right, loss in value in a particular month. In some cases, as much as 50%. I think for most people, if they lost 50% of their portfolio value in a month, they'd probably sell all just to kind of stop their losses. But 20 to 25% seems to be that threshold where you start really getting a sense of how much risk, or how much, like, let's say, price variability, how much ups and downs an investor is willing to stomach and still hang on, right? 20 to 25% tends to be that kind of threshold where people are, okay, I'm jumping ship, I can't, 25%, that's my limit, I don't go beyond that, right? But in some cases people say, you know what, if there's no fundamental reason, or if the market sees it wrong, maybe I'm going to double down, maybe I'll buy even more. I still believe in the company, and even though it has retrenched a bit, or it has sold off, if I still believe in the story and I believe the prospects are strong over the long term, then a 10 to 20 to 25% sell-off in a single month is not going to shake me from my resolve. So that's why these kind of questionnaires do require some nuance. And I think what makes these even more effective is if you're able to provide scenarios, or even ask the same question multiple times in different ways, so that you can really calibrate your sort of, profile of the customer. So this is just an example of one of the things that was not stated in the initial kind of interview, or the initial voice note that I left. And so here I'm going to actually tell myself, I will just actually report for myself, I would likely do nothing if my portfolio lost 10% of its value in a month, right? Because again, thinking about it from a portfolio perspective, it doesn't mean that all the companies in your portfolio are going down together 10%. It could just mean that one of the portfolio components has, for some reason, had a big sell-off, and that's dragging down the rest of the portfolio. So there's different ways to think about that. All right, my investment knowledge, I would say, now this semantically, it kind of determined that I have a moderate level of investment knowledge, but I think I'll actually adjust this and say that I actually have extensive knowledge. And it also asked which of the current investment products that you're familiar with, select all that apply. I mentioned that I currently have 10 years of experience in investing, mostly stocks and mutual funds, but I'm also familiar with bonds, ETFs, options, futures, cryptocurrencies, and real estate. So I can go in and actually I can add more details, right? But the whole idea is that I think if you were to fill this out, and I timed it, I believe by speaking rather than having to type and click, you are getting through this form on average. Again, I timed it several times. I was getting through the form on average 20 to 25% faster by talking rather than typing. So that actually is an important metric, because when you are building products, onboarding and conversion rates, getting people to actually go from just being a visitor to signing up and filling out forms and taking those different steps down the funnel, these are all the things that we work on as digital product creators. We want people to go through those journeys and provide that extra level of detail so we can provide more personalized service for them. But there's this friction, there's a hurdle. People have to want to go through that. And so anything you can do to make it more streamlined or easy for them will help improve the chances that you get more robust data and you get people to actually take those extra steps. So this is part of the onboarding journey. Now, if I filled this out completely, what it should do is provide me with a more tailored, or you could say a filter through all the different companies in the investment universe, and help me identify those companies which meet my criteria, right? And help match me to a portfolio, right? A basket of different companies occupying different parts of the market, different sectors and so forth, that meets my personal style, or that is suitable for me, right? There's a reasonable basis for me to want to invest into that product. And for the investment advisor, or the asset management firm to recommend or suggest this basket or portfolio or fund to me, right? So that is kind of helping, I believe, streamline the process. And I think this is whole onboarding and then matching people based on their stated preferences, and then even going through that over time and updating it dynamically by observing how people react, because what they say and what they do sometimes can be slightly different, and then asking them the same question again in a different way, or over time, people may change, or they may adapt, or they may, they may kind of express a higher level of risk over time or lower level of risk, depending on their comfort with the market or where they are in their life. So I wouldn't necessarily say, like, if you fill out this form, this is how you'll be forever, but it's a good starting point to help give solid recommendations for people, because you want to be able to provide a service or product to people that suits them, that they'll be happy with, that they'll be satisfied with, right? It doesn't make sense to give people a risky basket of stocks to the point where it's so volatile they can't sleep at night because they don't really know, like, if their money's safe, right? At the same time, if they have a longer term time horizon and you recommend them a basket of stocks which are not really the growth sectors but more of the steady income, then they may not meet their goal in time, right? If they're looking to make significant capital appreciation, right, they may need a slightly more aggressive approach. So it's important to understand some of these key inputs or parameters into what goes into recommending or suggesting a portfolio to a potential customer. And those things are going to be things like your age, your income, net worth, your experience, your risk tolerance, your goals, and so forth, your time horizon. Right? But overall, I believe that the whole concept of onboarding and getting people to take that next step, provide this information, to go through that process, all of this can always be improved and optimized. And the more that you improve and optimize the onboarding experience, the better results you're going to get. So, like in our case, for example, with the portfolio, the version you see of our website now, the homepage, is significantly different than what we launched with at the beginning of this month. We've been looking at the data, we're looking at the analytics to try to improve the onboarding experience, right? Because we've been developing the product and we know it so deeply, we didn't really expect or to spend a lot of time on just the front page, on the sign up and login flow, right? Because we're already deep into the product. We are, creating portfolios, rebalancing them, and using the chatbot. We're looking at all the features. But the data was showing us that there was a lot of people who weren't even getting past the front page. So we needed to then start optimizing the experience for the first-time user who are just new to our website and don't even know if they want to go any deeper. And so to do that, to make that process smoother and more efficient, we've been working on improving the onboarding experience. So to the extent that we can make the whole sign-up, login process faster, more smooth, and then we can present people with maybe a tour, for example, to kind of help them understand what the different feature sets are and what they can take advantage of. This could help improve the whole idea of onboarding. And so whether we are asking people to come in and make a portfolio, or even before that, maybe they don't even know where to start, we might ask them to do a suitability form. And to make that process go by even faster or better, we might even use AI and things like voice notes, for example, and to transcribe what they say and fill out the form for them. So that's what I wanted to share with you guys today. Talk a little bit about this whole idea of suitability, investment profile forms, onboarding, and how we can use the new technologies of generative AI to improve this process and bring more people into the market. I hope you guys enjoyed this episode, and I'll see you on the next one.